Get my dollar trade playbook to learn how to position, profit, and protect during a dollar devaluation. Scan this QR code or click on the link in the description. I have a few questions here, so let's go over it. What do you think about gold in light of all this? It took a bit of a hit on Japan deal, hit its head at 34.50. So this is continuous contract for gold. That was lovely. April 22nd, it hit 34.99. I did it live, and I said, I think that's it for now. Anyway, but it has just been coiling. So should we break out, like you just said, 34.50? We could do a fake breakout and fast failure and have a little reversion here. But for the most part, gold is bulled up, and there are macro reasons for it that are immense as it relates.
All gas, no brakes plays into it, Samantha.
The fiscal spending is part of this fiscal dominance, which gold is a hedge against, but it's mostly the fact that our U.S. trading partners are now trading amongst themselves outside of the dollar and using gold for settlement. Again, we have three ways that we have this huge, massive trade deficit with other countries because of our exorbitant privilege with the US dollar. Now, countries outside have obviously decided they don't want to have so much dependence on the petrodollar. China has this mandate where they have driven their economy toward EV, which is a huge economic stimulus to not have to import so much of our crude to refine and use in their production. And therefore, they have less dependency on the petrodollar. They want to get away from this immense dependency also of dollar trade. So they're settling outside of the dollar and in gold. So this is one of the main reasons. So it's called an external drain for those who follow Jeffrey, who's on our trading desk. He's the classical economist, and it's very, very common in fiscal dominance. So that's going to continue. Now, depends on your time frame, but gold and silver and such, this was the most bullish chart I had. So this is what I wanted to show as it relates to this chart, gold and silver. So when you're asking about, am I worried about gold moving higher? No, but it is extremely extended relative in this ratio. I literally posted this chart. So this is the most bullish chart that I have. March 1st, in fact, gold spiked higher and then silver followed in April. This is a ratio, but it's gone hot fire flames, taking out, and it's not a monthly, by the way. This is not a monthly, taking out the prior 2011, 2012 high. That's all macro, very, very strongly macro driven, and also falling dollar. So you also have, this is the Trump bump, and this is the dollar that has fallen 11% peak to trough. And this is what makes objects appear larger also. So you have this de-dollarization, debasement, devaluation. It's a Trump feature, not a bug, and that will continue. And that's another reason why gold is going to stay bid. It depends on your time frame. And T has a really good kind of list of why long bond yields can rise. In addition to what I'm going to talk about real briefly, yields from higher tariffs, prices from inflation, commodities, absolutely. In fact, we've had an off-ramp with stable coins and Bitcoin and Ethereum and all this other stuff, which is backed by nothing relative to the dollar, which is backed by treasuries, US treasuries, and the military. But the point is, commodities, if they were to get too excited here as it relates to an inflationary impulse, we would definitely see higher yields. And right now, we have got risk that is all over the place into end of year post-trade deals that is not being priced in. It doesn't mean they are not risks as it relates to the cost push inflation, which I'm expanding on what T is his bullet points. But the point is, yes, this is why gold is bid, which is why the very small market of palladium and platinum, very small, is hot fire flames. This is why copper is bid. It's not necessarily that it's economic growth. It's also just because the dollar is freaking falling. So I know there's lots of correlation. People have their excitement here as it relates to why the market can continue higher for longer. And I am with you as it relates to melt up, but not for healthy reasons. Anyway, the point is the deficits, we could go on and on and on. Japan, what happens there? Yes, Ishiba, he announced his resignation, Bank of Japan president, for end of August. So we had some shake and bake there in their 10-year JGB. Yes, there's some correlation also with gold. In fact, if you do a fractal with a 30-year JGB yield and gold in the past 2 years, you will see a very tight correlation. Anyway, Fed cuts does not help long end of the curve. This is true. We had that already proven September 18th. I literally wrote a post for clients that morning saying, hey, be careful, it's time for a yield spike. They caught 50 basis points and we went higher 100 basis points in the 10-year until the shake and bake of April 7th, where the bond market and credit market froze on the tariff announcements April 2nd. And basically Trump had to come in and intervene and say, okay, we give up. You bond people are so sensitive. So anyway, but the point is, I wanted to get to is this United States exceptionalism. This is too short term. In other words, we can't just baby with the bathwater thrown out type of thing where we get this, okay, United States is or isn't exceptional. This is a process. And the dollar falling 11% in the first half of this year is unprecedented. But it's also expected. He campaigned on this, right? Stephen Miron talked about how the dollar is overvalued. And in order to help this kind of industrial renaissance, we need to bring it down through tariffs, through a balance of trade, which is going to also help the dollar soften relative to rest of the world other than China because they pegged. But the point is, money did go home, but there was another reason why there was repatriation during this sell-off on the announcement of tariffs and a very aggressive Trump administration that was pushing the Section 899. So it isn't that they've come back in because of AI or what have you. The fact is the Section 899 that was being proposed was pulled back right before the OBBB Act was passed July 4th. Bessent and Trump were talking about this major tax on foreign holders of U.S. investments. Huge, big implications. The dollar sold off as money was repatriating home for all kinds of reasons, but that was a really big one. It's a form of capital control. It's literally taxing foreign investment in the U.S. where there were none assessed before. So they had all kinds of reasons to exit stage left or to chase yields abroad or to just keep their money at home. So foreign holdings of U.S. assets, it's not fast, it's slow. 20% of U.S. equity markets, 20% according to Apollo, is held by foreigners, 30% of credit markets, if I remember correctly, and 30% of treasury markets. This is not something that they can go in and out of easily. These are very liquid markets, but it doesn't mean that they can take those huge trillions in and out like a revolving door. That's not how it works. So if they were to do that, we would be over the abyss. So there isn't an incentive for Trump to tank the stock market and therefore government receipts, which he needs desperately to offset the rising deficit. Tariffs, government receipts from an amazing stock market, all those profits we have to pay taxes on. So that was a huge reason why the market got a relief. It was the all gas, no brakes fiscal spending that passed in Congress and the retraction of the threat of Section 899. That doesn't mean the US dollar isn't still going to fall. We have a lot to rebalance. We have a massive amount of rebalancing because of the trade deficits. And US as a safe haven right now has also been kind of rethought by foreign money because of the chaotic nature of our currency chief there, Trump. So I don't think we're out of the woods, big picture there, but we still have this exorbitant privilege and we have to maintain confidence. But you can see by the bid in gold where confidence has been fading. It's more than just capital flows. It's a capital war. I think that's another reason why gold is absolutely holding up extremely well and will continue to.
Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.